Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul and Ville and Pål. This is Fintech Daydreaming.
Hello and welcome back to Fintech Daydreaming. My name is Ville and I will be your host for this episode, our very special episode this time around. Now, of course, I'm not here alone. I'm here joined by my good friend and co-host, Paul. So, Paul, how's the autumn treating you so far? It seems to be getting a bit cold here, at least in Finland.
You're making it almost sound as if I'm not in Finland. It's getting a bit cold here in Finland, as if I'm miles and miles away from you, but I'm just down the road from you. So we're feeling the same coldness, the same dreary, horrible, disgusting weather. It's been raining so much. I think I'm turning into a duck at the moment. But apart from that, I'm good. My surgery, I don't think we've shared this with our listeners, but I went into hospital a couple of weeks ago for an operation. That's healed up nicely. I can go back to the gym again now. So I'm feeling human again, going into the gym. Not that I'm a gym rat, but I'm going into the gym, working out, feeling good and everything else. And as I was just saying to our guests before we started recording today, I am recording this, having a fantastic chat with you guys, trying to stay calm, but at the same time helping my girlfriend to move. And she has locked herself out of her old apartment, which means that she's sort of just sitting there waiting for us to finish recording this so that I can go and rescue her and help her to finish that process. And you're going to come and help us later, Ville. So yeah. We need to have a fantastic recording now, a great discussion that I know we're going to have because we've got a fantastic guest with us. But then we need to rush to her aid and be superheroes after this, like we always are.
Sounds like a really good plan. Now, I don't know why we end up doing these recordings always on Fridays, and something always happens when we're recording on a Friday. Now it's like, the end of a very long week with a conference and travel and everything, and now we have this move thing going on. Anyway, everything seems to be happening at the same time. But no worries, we have a good episode coming up today, and I know it's a good episode, and I was actually a little bit foreshadowing when I talked about the weather in Finland specifically, because we are joined by a very international man of mystery and somebody who has actually been on the podcast before. So I'm gonna leave the introductions to him himself. So Paul, welcome back. What have you been up to? And tell me, why are you here today with us?
Yeah, Paul number one, or I think we're going to refer to you as Mr. K today to avoid an oblique reference to Men in Black. So K, great to see you. Glad that you're healthy and up and running. And Ville, I'm just coming to you live from New York City, where it's also a little rainy, a little drizzly. So I think our last podcast in May 2022, I did literally from my garage, from my house in downtown Menlo Park. And now I think the fact that I'm coming to you live from my home base here in New York City is very reflective of a little bit of the change of vibes. I think people talk a lot about vibes. I think it's very much sort of an East Coast crypto and fintech kind of fully regulated kind of vibe compared to May of 2022. Yep. And I'd love to sort of do a recap of our various different predictions. And I know we're going to do some predictions for when I come back 3 years hence and do this again, hopefully in better weather. So yeah, really excited to be on this podcast. I think you guys do tremendous work for the fintech ecosystem because let's just not beat about the bush. There is so much garbage out there. There's a lot of fake news. There's a lot of hype. But I really have appreciated your usual Scandinavian, direct to the point, truth and honesty, which is very well appreciated, and your very oblique Finnish humor, which I personally find very enjoyable. So it's really a pleasure to be back. So what I've been up to since we last spoke, so I think I was actually on Meta payroll the last time that we did this. I'm happy to report that I am back where I should be, which is in the land of entrepreneurs. There's been a tremendous amount that has happened since the DM Novi project, which is what I was involved with, and I know we spoke about it a little bit. So I've taken the opportunity after taking a little bit of time off to scan kind of the globe to see where I think just doing heat mapping of where I think things like blockchain immutability and smart contracts and the payment rails and the self-settling and all the things that we talk about a lot on this podcast, like what market is most ripe for dramatic change and dramatic adoption. And I've actually come kind of full circle to the continent where I grew up, actually in Africa. So I am currently with my co-founders, have started a company that is going to be focused on-chain lending and payments. And I believe the two very much go together to build a Pan-African blockchain forward and AI native for the underwriting part of it, platform and company on a Pan-African basis, because I think that is where things are the most broken from a financial services perspective. And so that's what I've been working on. And more to come on that. You can go check out Sukaa with 2ways.io, but you'll see that we're still a bit in a stealth mode, but more to come on that. So wanted to start off a little bit on a scorecard to put everybody on the spot from our May of 2022 on what we've seen from our predictions.
Oh, wow.
And I'm delighted to report to you guys, live from New York, it's Friday morning style, that I think some of the regulators around crypto have listened to our podcast very carefully. And Kay and Ville, I think, not surprisingly, they followed your advice. So I think on the regulatory clarity, there is a new dawn. So goodbye, Larry Gensler, and hello, Paul Atkins and the Genius Act. And I remember talking distinctly and debating a bit with you guys about certainly my philosophy of, if you're fish or cut bait. If you're going to regulate, just regulate. If you're not going to regulate, just get out of the way. So entrepreneurs like us can get going and build things and actually create value for businesses and consumers. That's good. One for one. I think we debated a bit what is a stablecoin, what is a security, right? So we talked about the Howey test and all that, and don't need to go back to it, but please go back and re-listen to the Downtown Menlo Park episode from May of 2022. Very California vibes on that one. We now know that qualifying payment stablecoins are not deemed to be securities under the Howey test, which I think is the right result. And I think my fellow brethren, certainly in the U.S. securities bar, would largely agree with me. So I think as a sidebar, I listened with great abated breath about your emergency episode, and I thought that all would be revealed about the state of Euro blockchain. I was actually just recently, in Zurich and London and other places, kind of on work-related things, and this was a hot topic. But I'll turn it over to you, Ville. But I think the spoiler here is there was no emergency that I think warranted because a couple of banks decided to get together and issue a stablecoin, which like we were doing at Facebook like many years ago. Yep. So what is the news there, Ville, and what prompted this sudden, uncharacteristic, very not un-Scandinavian emergency podcast?
Yeah, wow, what an introduction! So much to dig into here. I mean, you mentioned so many things that we love to talk about and hate to talk about on the podcast at the same time, specifically stablecoins, blockchain, AI, all the good stuff. And most importantly, I think, Paul, and if you listen to the previous episode where we had you as a guest, you know that we share a history working in the emerging economies, Africa. We have our past with Nokia as well. So again, and we are focusing on the Indian market back then together. So So yeah, I mean, there's a lot of things that are going to be very interesting to dig into here. But it's also quite interesting that you actually listened to the episode again that we did last time. I have never done that. I've never went back and listened twice to an episode that we have recorded. So thank you for the scorecard, I guess would be my guess there. But my kind of a message there. Now, to the point of the emergency podcast, and if you haven't listened to the emergency podcast, we did this almost like a tongue-in-cheek emergency podcast when the 9 banks from Europe decided to launch their own stablecoin initiative, a stablecoin that will be issued under the markets in crypto assets regulation rules and will be done by the end of 2027. 2026, and it will be done through an e-money institution license as well. And again, we did the emergency episode because, well, at least in our small bubble here in the Nordics, the whole banking sector seemed to jump at the same time and started asking a lot of questions. So we decided, okay, we still have a week to go till the next episode. Let's not wait. Let's just do a quick episode where we explain what the stablecoin is, what is not, and what do we think about it a little bit. So at least we saved some time because we didn't have to explain it multiple times to all the people. We just sent a link to the episode, basically. But yeah, let's actually get into the discussion a little bit. But before we do that, we do have a tradition because I have a feeling that we're going to go very fast, very soon with this conversation. So we don't want to forget. We cannot do an episode of this podcast without having a joke told by the guest or one of the hosts. And I believe that Paul, you as a guest today, do you have a joke for us? Is that right?
Yeah, I have a joke. I fear that it's not as good as my California joke, but so maybe about a year ago or so, I got invited from someone that I know who was a venture guy investing specifically in crypto startups. And the joke was, and I'm elaborating a little bit on this. So overheard at this dinner in one of these very fancy kind of private kind of restaurants that are very hard to get into. So I just went to go check it out. And one of the guys who looked like he was about 16 years old was talking about how his VC, including the one that was hosting the dinner, told me to find a product market fit, before they would lead the Series A. And by the way, it was one of these, startups where, God bless them, like I still to this day could not explain to you exactly what it is that they did, but they raised sort of double-digit millions of dollars actually in seed. Okay, so it's like, oh, okay, well, so if VC investor, wanted me to find product market fit, and I was kind of one of the more senior kind of fintech guys there. So before he lead the next round. And he at one point turned to me and said, I found the product, right? And it's really great. I'm still looking for the market. And I fear that there's still actually a lot of that going on, I think, unfortunately. And the question, I think, of, where is the market? I mean, yes, we know there are products, they're well-funded, and they do some cool things around in-game purchases and things like that. And I don't mean to trivialize any of that. But going back to your emergency pod, and of course I listened to those episodes. I'm quite surprised that you're surprised that I actually listen to you guys, because like I say, I mean, at least I'm not listening to garbage when I listen to you guys. And so if we, for example, think about the context of these 9 banks that kind of jumped at the same time. So, kind of coordination, that's great. So I think 2023, 2024, what I'm reading is about $7 trillion were settled in stablecoin. I think this is a Andreessen Horowitz kind of white paper, but $2.5 trillion were payments transactions. So again, back to when we last spoke, we've had about a 10x growth in measured by TPV since my Novi days. But I think that tells a very incomplete story, because if you look at where a lot of the heat is, back to the heat map and why I'm currently focused once again on the emerging markets, I think the strong adoption that you see in markets like Nigeria, Turkey, Brazil, I think very much correspond over that 3-year time period, 3 years and change time horizon to currency devaluation. I mean, it's just no surprise. I've taken Argentina off the list because, of course, famous for their currency volatility, but maybe they're going to pull out of it. Milei seems to have received a mandate, but Nigeria and Turkey, for example, I just did quick math on this. So Nigeria devalued 270-ish% against the dollar over that 3-year span. Turkey over 200%. So I think people who follow financial services and adoption and digital payments like we do, like none of this is a surprise. There's no emergency podcast required to report that the emerging markets are seeing huge adoption in stablecoins. And just to put everybody now on the spot, now we've done just go back to the recap a little bit. And just to pat ourselves on the back, we talked about how CBDCs were not going to take off, other than sort of the totalitarian regimes. True, correct. We were 2 for 2 there now. We talked a little bit about refundability of stablecoins. So you saw that Circle has come up with basically an ability to reverse crypto transactions and the pros and cons, and people are in an uproar about that. We talked about that. So there's nothing technologically stopping them from doing it. The Genius Act we talked about, and I think crypto as a form of payments, especially in the developing markets, back to my $2.5 trillion in crypto, US dollar denominated, like 99% of stablecoins are dollar denominated, are settled. I mean, those are real numbers, right? We see it on chain, so it's indisputable. And so, yeah, I want to ask you guys for the EU in particular, as opposed to the emerging market, like what's broken?
But I think you bring
these 9 banks. Yeah.
I mean, you bring up a very valid point, which is underlying part of this, and partially the reason for why Ville and I did the emergency episode, although we keep joking about calling it the emergency episode. It was actually tongue-in-cheek because a different podcast keeps doing emergency episodes, and we wanted, it was, me too. But when you're mentioning, like you rightly said, you're talking about where there's devaluation of the currency, that they're also not just emerging markets, they're markets where there is maybe not so much structure and trust and rigor in the not just the financial system, but also the political system in those countries, right? So there's a lot of fraud, there's an awful lot of bribery, a lot of other things going on. And therefore you can understand why there is a need and a growth to potentially change things. When you come to particularly the Nordics, things are so well structured here. Generally, people trust the government. They generally trust the banks. They trust the financial institutions. There's not the same need here. So when suddenly these banks pop up and say, hey, we're going to do a stable coin, you end up with a fundamental question. And Ville makes a joke out of this, back to a boy band, but tell me why. What's the purpose? What's the use case? What's the reason in our market, being Europe or being the Nordics?
Or is it all just a heartbreak like this?
Anyway. Yeah, or is it all just a heartbreak? But it comes down to why. And in our episode, we were trying to tease that out a little bit to say, fine, great. The technology is there. A little bit back to what you were saying about, we've got the technology. We're looking for a problem. Hey, let's just bring out a stable coin. Yeah, but why?
Yeah. So I think on the, looking at this, with my sort of now New York City, financial capital of the world vibe shift going on, and kind of digging into that stack. So the euro is a stable currency. And more importantly, the clearing and settlement system. So I'm talking in particular about SEPA Direct within the Eurozone, but also in and out of the Eurozone. So, for example, CLS, so clearing and settlement, for audience members that really want to geek out on this, the Herstatt crisis in '74, where basically a German bank tried to send a wire into the US, and because of a holiday that they didn't really account for, the money just kind of disappeared into the ether. And this led to the creation of CLS, the continuously linked settlement system. So my point is that I think between the EU and the US, certainly, we've had the luxury of sort of 50 plus-ish years to kind of figure out, with CLS, importantly, also handling the liquidity, right? They are an active participant in the middle that more or less guarantees that payment and more or less makes it available real time. That sounds suspiciously like real-time settlement. And so, one of the key value drivers for a crypto payment, let alone a stablecoin payment, is that it is self-settling. But if you ask businesses in particular, conducting business between the Eurozone and the US, I think they would tell you, yeah, we have real-time settlement. It's called CLS. It's been around since the 1970s. Yeah. And everything is digitized. And I'm not worried that, my German wire, into US dollars here to, Boney Mellon is not gonna go. Like, that's just not an issue. So I'm kind of curious to hear from you guys where you think that there may be corners in the market where, like, what explains this behavior by 9 otherwise rationalized, I assume, banks have decided, is this sort of a FOMO? Like, they're just like, oh, I just worry that I'm going to miss out. Do they just want the deposits, right? Because it's just another form of getting cheap capital because they're issuing you a token in exchange for an actual euro. What is you guys' take on that?
Well, I don't want to speak on behalf of these banks. Obviously, I don't. I never even speak on behalf of my bank on this podcast. It's just my own personal opinion as always. But the way I've understood from the public announcements that they have made and talking to some of the industry colleagues as well is that they just wanted to do quote unquote something in this space. The promise of having this real-time settlement capability for cross-border payments or different kinds of digital marketplaces where you can have delivery versus payment done atomically and instantly, for example. They see all these buzz terms that are potentially can be unlocked by stablecoins. Now, be as it may, they thought, this is what I believe, is that it's better to be in that game somehow than to just stand outside and wait for things to move somewhere. So given the kind of scale and the structure of this joint venture that they're doing, it's not actually that big of a bet. I mean, if you put 9 banks together and then you start a JV in the Netherlands in order to start a stablecoin, that investment is actually quite modest, but the upside of having the insights and the practical experience of being part of an issuing stablecoin and doing the regulatory parts of that as well are valuable lessons to be learned. I would also presume that they're going to have to overcome a lot of regulatory hurdles if they really want to start integrating this into the bank's daily business, because this is another thing that they actually did not say. They did not say how the banks involved would actually be using this stablecoin, or if at all. So because they don't seem to have those plans, this plan looks to be that the JV is going to issue the stablecoin and then they're going to start to see how can they get people to adopt it somehow. So it feels like let's try things out and see how things go. But they have so far failed to answer the question why in a very clear way. At least I'm sure they have plans. They are just not ready to share them yet. But we'll see how it goes. But let's get back to the question why. So obviously, I mean, Paul, you can speak on behalf of how you plan to use it with your company now moving into Africa. How are you going to benefit from using a stablecoin versus just doing a central bank settlement? I mean, again, maybe start from there. So why stablecoins?
Yeah, and I think it's a good contrast. Actually, this discussion about what our European Union brethren are doing. So I think the stablecoin has a lot of things going for it. If you think about the biggest pain points for businesses, and my own company, we are very focused on servicing businesses, especially the small, medium size enterprises. So I think you have 2 different kind of segments. So on the one hand, you've got a bunch of global enterprises that have already gone into Africa, kind of gangbusters, right? And some of them have really gotten their fingers burned. So what I mean by that is, if you just look at the demography of Africa, it's already the world's youngest population. And the vast majority of the growth in the adult working age, consuming age population through 2050 is going to be disproportionately in Africa. So Africa is going to have a quarter of the world's population, and it's going to continue to have one of the world's youngest populations. If you compare that to a market like China, because Africa is about 1.4 billion people, China is about 1.4, but every time they revise those figures, it seems to actually shrink. But their population is already declining, perhaps terminally declining. So I think even speaking from my own personal experience, having worked at some very large global enterprises that need to move money around everywhere, including within Africa and out of Africa, it continues to be shockingly expensive and shockingly slow and shockingly opaque to move, let's say, millions of dollars legitimately within the continent and out of the continent. It has a lot to do with the fact that, yes, there is fragmentation. We have 54 countries, although I note that the United States also has 50 states with 50 regulators. I mean, some of them declined to regulate, right? So it's more like 45 or 46 or something like this. So it's not just, you can't just be fragmentation alone. There's no Pan-African real-time clearing and settlement system. So the fact that stablecoins are self-settling is very important. Maybe not so obvious from a consumer perspective, because I think the mobile money revolution, M-Pesa, we talked about in the previous episode, and MTN Momo, and those guys do really great work. And I think for consumers, for P2P transactions, or even P2M, things have come a long way. But I think ironically, if you're an African business doing, let's say, $1 million in US dollar terms or more, right? It's really hard for you to move money around cheaply and fast. So global enterprises come into Africa. You basically need to integrate with probably half a dozen different payment service providers in order to move money around within the continent. I'm just talking about like just collecting AR, AP, just normal course business across the continent. And that is an extremely inefficient way to do it, because behind the PSP that you connect with, there's like a whole opaque list of other financial service players that are sitting behind them that are providing liquidity. So if you think about, for example, a Naira transaction into Kenyan shillings, someone needs to provide FX, right? Assuming that they'll give you a fair FX rate to move $10 million from Naira into sterling or US dollar back into Kenyan shillings. Like it just starts to become really complicated the more you look at it, with more and more middlemen in between to actually move that money around, which with the end result that it actually takes about 5 to 7, 8, 9% to move, let's say, over $1 million for legitimate business purposes within the continent, right? So the clearing settlement aspect, there's also the currency volatility aspect. So we can even just focus on those two. And then just quickly, and then what happens is that, my experience as well, inevitably they do business with local African businesses, because the local African businesses are providing the global enterprises, services or products, or their suppliers, right, or distributors, or even just have employees. The local businesses, they can't grow because of a lack of working capital. And I think in both instances, stablecoin is so obviously and clearly the answer. Yeah, go ahead, Kate.
Yeah, okay. Just a quick question. I'd like to pull it up a little bit. We're having a fantastic discussion, but sometimes I need to step into the world of our listeners. Just to get a clarity here, Paul, you're talking about stablecoin transactions in a business-to-business context, right? It's not business to consumers, consumers to consumers.
Correct.
It's business to business. So it's talking about when local businesses in Africa are trading with non-African based businesses, or are you also looking at business to business within inside of Africa?
Both.
Are you then looking at, you mentioned employees here, etc. So you're also then looking at business to consumer? Because I'm wondering, once you've got stable coins coming into the hands of individuals, it's always that last mile, which becomes a problem, right? Because they can't run around with US denominated stable coins in Africa to buy their groceries, that they still have to convert that. So really your focus here is on that larger business to business.
Part of the puzzle, and I'm not going to give away all of it. But you guys will understand this to say that I think back to the predictions, and I want to come back to Ville as well. Part of my prediction is if you look historically at all the large, dominant, sort of oligopolistic financial services players, and I'm not just talking about payments, I'm talking about lending. Just think of JP Morgan Chase and Chase Payment Tech, and think about the large banks in China, and think about the large financial institutions in India, and so forth and so on. The commonality is that they're fully regulated and they provide a full suite of services for their customers, including the currency FX, including handling liquidity, including on and off ramps into stablecoin or digital money. I mean, it's not that different. Like if I show up with Kenyan shillings and I'm loading 10,000 shillings of value into my M-Pesa account, right? And then offloading on the off-ramping on, it's not different. It's not a different user experience. So you're not asking. So we're focused on definitely B2B payments. I think a part of the clue as to how you get adoption for the last to the P last mile involves having the right regulatory licenses and capabilities to be able to handle and integrate with all of the forms of payment that already exist, which largely are bank transfers, some cards, not a lot, mobile money, different forms of digital money, which means that if you can't provide that, right, if JP Morgan Chase can't provide that full suite of services, you don't get adoption. Or if American Express doesn't offer that full suite of service, like if you're stuck with stablecoin that you can't use anywhere, it just goes nowhere, right? Other than actually it's a stable way, sorry, pun intended, to keep your savings because it's a US dollar, right? So it's a whole lot safer than keeping it in Naira or shilling or so forth. But Ville, you wanted to come in.
Yeah, so I'm going to push back on the settlement aspect of that. But just before I do that, so you're planning to use a USD denominated stablecoin for Pan-African cross-border settlement, correct?
Yes.
Okay.
Yes.
Okay, good. Okay, so that's another thing that that's a problem that doesn't exist in Europe, for instance. And to a certain extent, I would say it doesn't also exist in the US, even there was the more fragmentation with the different states, of course, as you said. But definitely, okay, I buy the fragmentation thing. Would I be happy as an African country that that there's a settlement happening between African countries in a US currency? I don't know, but yeah. We'll leave that just there for a moment. But again, I didn't want to
hold. Sorry, Ville, just because I know that African regulators are going to be paying attention because I know that you have a huge audience ship, and I say that not only tongue in cheek. To be very clear, in many of the B2B transactions, let's just focus on corporate to corporate transactions. It's already dollarized. In other words, what I'm proposing is not as revolutionary as it sounds, because if you think about even a Nigerian trader, like a medium-sized Nigerian trader that buys goods, right? Like let's say they buy consumer goods from China in renminbi and sells them in naira, right? And then you just kind of keep on cycling through that. That economy is already dollarized. The Chinese supplier of televisions is not accepting naira or shillings or South African rand. They're accepting US dollars or renminbi. Yeah. So just to let you know that we're not messing with any M1 money supply or anything like that. All we're doing is we're just slipstreaming into what is already happening in the marketplace. We're not creating money, remember? We're not destroying money. Total money volume, right, does not change. Nothing is changing. Good. It's just cheaper and faster and smarter, right? Which is actually good for the economy. Sorry, go ahead, Ville.
Indeed. So again, and I really feel like this is like a 3-hour episode because we were barely just scratched the surface of this topic. But I have to go into the settlement just for a bit. Back to the settlement. So you said that the stable coins, the USD stable coins or stable coins in general, are self-settling things. So basically, when you send it, it's settled. But that's not true now, is it? Because if for example, let's say your hypothetical Nordic bank receives USD stablecoins. Those are not things that we can put on our balance sheets here in the Nordics.
Yep.
So again,
Yes.
that's not settlement. So the only settlement only happens between central bank deposits, between licensed institutions. So stablecoin at best in these circumstances can be a messaging, basically IOU or traveler's check, like Tony McLaughlin always loves to talk about. And it's not a settlement asset. And to make it even more complicated, because once you start having multiple currencies of different stable coins, there are multiple issuers of different stable coins, and then they are moving between regulatory jurisdictions that have very different balance sheet treatments, for example, for different types of digital assets. There's going to be a lot of complexity in this space. And I just wanted to kind of say all that to hear your answer to when you say it's a self-settling asset. Does that mean that you have figured out a way to actually have that on balance sheet once it arrives? And how, I mean, you're not going to give away the secret sauce, I know, but I mean, have you been able to figure that out? And to the extent that you can, how?
Yeah, we've absolutely figured it out, and I just want to give credit where it's due. It's not that myself and my co-founders are only smart people, the only smart people around this space. A part of the clue is in exactly what you said about financial institutions and banks. If you look at it from the perspective of a African or large global business doing business in Africa, for them, what matters is that they have a deposit that has a credit of 10 million US dollars, right? And that is a liquid deposit, right? That they can immediately, assuming it's a DDA account, that they can withdraw or use for further payment. So when I say self-settling, it is only self-settling, I would argue. And I think the future of who the winners are going to be, emerging markets or European, it doesn't matter. It's going to be people that look like banks behind the scenes. What I'm not saying is the 9 European Union banks are going to win. I'm just saying that these guys, the people that are smart doing this to really make it look self-settling from a customer perspective by abstracting away all of the complexity are the people that are regulated like banks. And that is very clear now under both MiCA and the Genius Act, right? It's very clear that these are pro-bank pieces of regulation, probably because, you know, of some very good and lucrative lobbying efforts on K Street on behalf of the banks. But I don't think it's a bad thing. I think it's a very logical thing. So I think that's the clue. Is you have to be financially regulated. Anybody coming to us, for example, and saying that I have a really good L2 protocol, which is basically just an addressing protocol, right? And stablecoins are self-settling, right? I think one needs to make sure to look under the hood, right? To understand what do you mean, to ask the question that exactly you asked. Because from a customer perspective, I just want $10 million and you told me that you're going to charge me 1% interchange instead of 7. That's what I care about, right?
Yeah.
So aren't we then basically just moving the custodian of trust from one entity to another?
This is a really good question. I tend to think that, and it's actually related to the closed loop, open loop kind of question as well. I will make a bet that the players that start by building what effectively in payment lingo we would call closed loop payment systems, right? And there's pros and cons to that, and we know the Amex versus Visa, MasterCard, and we don't need to get into all that. That is to say, I think the players that are permissioned, even though they earn the rightful ire from kind of the Bitcoin maximalists, right? The libertarians. I think that is the way to start because of the KYC AML travel rule problem. Like I haven't, and I talk to a lot of people in the space, and I know you guys do too. People who are much smarter than me on crypto infrastructure who have like built L1 blockchains from scratch, right? And I'm not sure that back to the now that we live in a kind of more clear regulatory world, I don't think there's any fudge room for someone to say like, well, this fraud happened on the system because, we relied on a whitelist, right? Because we really just believe philosophically in being a permissionless chain. Like I think pre-Genius Act, you could have kind of argued with a straight face, well, the regulation was clear. We're trying to be the good guys. Like there's just someone else on this other corner of the blockchain that's a bad actor. And we relied on the whitelist that was just provided to us, right? I don't think you can make that argument with a straight face, and people will, right? Because now the Genius Act is super clear on who can do custody, super clear on who can do issuing, super clear that normal kind of banking rules with regard to, terrorism financing, anti-money, or, OFAC, all FATF, all those things, like they all apply. So, yeah, that's sort of my prediction. I think you're going to see private blockchains that are permissioned,
but
for a while.
Do they apply on both ends of the network? They very much apply in the US and US jurisdiction, and they apply in Europe. Do they all apply in Africa?
So let's go to real world examples, right? Real world examples of such network that, like Circle, for example, and I pick on Circle because they're publicly traded. We probably have more information about them than most others. We have a decent amount of information, for example, about what Stripe is doing. And Stripe has earned a lot of ire, I think, because they've acquired Bridge. And I think I actually kind of admire the vision of what they're trying to do. The idea is, why to just pull it up, right, to more user-friendly level. The question fundamentally is, I want it to be on blockchain because I don't trust centralized gatekeepers like JPMC or Wells Fargo, right? And probably rightfully so, because we all lived through this 2008 financial crisis, right? So it's like, okay, well, maybe they're not so trustworthy because those are all very much permission systems, right? But now people like Stripe and Circle are saying, well, you should just trust us instead of trusting them, versus the original sort of Bitcoin thesis, which is we don't trust anybody. So it's permissionless and it's completely distributed. There are no central gatekeepers in this system. I think I can't answer the question of which is right philosophically. I don't think. But what I can say is the market is not wrong. In other words, you can say what you will about the market, but I'm actually with Secretary Scott Bessent in this particular regard. Like, watch what the market is doing. If the market is telling you that people would rather trust Stripe than JPMC, then the market is right. Right. So that's my sense. It's one of my bold predictions.
All right.
Permissioned network, guys. That's what I'm betting on.
Interesting. There's so many rabbit holes we can go down to, but I mean, since I'm kind of really tempted to go down the rabbit holes, Paul, okay, on this episode, please bring us up. So let's think about the audience for a second here. How would you round up the discussion with a kind of good explanation on how do we land this thing in the next 5 minutes?
Good explanation, land this thing in the next few minutes, because we have to close an episode on a subject that really, like you said, has got an awful lot of rabbit holes, but a lot of interesting points for discussion. I mean, you mentioned JP Morgan, and I mean, Jamie has gone out now saying that actually he thinks that digital assets and cryptos are an interesting thing. So to some people, he's done a complete 360. I've always
180.
Okay,
180.
Okay,
Yeah.
complete 180. Yeah. Yeah, you're right. 360. Bad maths there for a minute. But I've always been a little bit on the fence when it comes to the whole crypto, digital assets, stable coins, even digital euro and everything else. I think I'm not saying it's bad. I'm not saying it's good. I still question a little bit why. I understand exactly what you're saying, Paul. I think that the journey you're going on makes sense. I'm still, to me, like I said, we're shifting the custodian of trust to a certain degree. If you don't trust the financial institutions in Africa, then you're sitting there in Africa and someone else comes along. Am I necessarily going to trust them just because it's a stable coin rather than something else? So there is an element here of not just the technology, not just the fact that we're finding a new way of representing old fiat currency at the end of the day, right? Because that's what we're talking about. It's also the fact that who do you trust? Who are you going to trust? And what is that custodian element of trust that you want to rely on? Is it the financial institutions? Because at the end of the day, the financial institutions are still part of this. You're not taking them out of the picture. They're still there. So there's a, to me, you're just adding another layer on top of the lasagna, or maybe you're just turning it into a nicer lasagna, but it's still an element of trust, an element of how do you guarantee no corruption, etc., etc. Very interesting journey, very interesting. I want to see this being relevant. I want to see it turning into something very good. So I'm going to keep my eyes very close on this. And Paul, I think you're doing. We've had fantastic discussions. So good luck, and I want to see this grow. But I think that's my summary, Ville. It's up, down, in, out. Yeah. Shit, we could spend at least another 3 hours on this, right?
You did it. And again, I'm itching to go down rabbit holes, but we just had one more comment on them, Paul. I will leave it up to you to give your final statements. But I find this super fascinating, and that's why I'm struggling going into details all the time, because Africa is very digital already when it comes to the last mile. So again, we have the M-Pesas in the world. We both worked in the region, Paul, you know this. So there's a lot of, everything is real time when it comes to person-to-person payments within the country, or at least within a certain operator network. So again, they have leapfrogged a lot of the Western economies when it comes to banking on the ground, mobile banking specifically, API-driven ecosystems, all of that exists. But there's a lot of hurdles between countries, and again, every country in Africa has its own central bank, its own government. There's a lot of differences in regulation, and again, very little interoperability pan-Africa. And I think you are in an interesting place trying to solve that exact problem. And again, we heard a little bit about how you plan to do it. And I really like the fact that you're moving down the regulated path. So you said that institutions that look a lot like banks are the key here. And I think that's a good way to start to get into that. I would have loved to kind of do this crossover thing where we would have kind of run to a scenario where the 9-bank European consortium sends their euro stablecoin to your business in Africa and see kind of what happens then.
Yeah, so I think just
fantastic, interesting scenario. But since we don't have time for that, we have to leave that for the next episode. But so, Paul, I mean, wrapping up here a little bit. So from what you're told so far, how would you summarize the episode before we schedule the next one?
I think the summary is that the proof is in the pudding. So if I ask the question, as I listen to your various different other very, very smart, very serious people, and I love that you guys are, despite the jokes, a very serious episode. Proof is in the pudding. So I've been asking myself for the last 7-8 years, where do you see all the promises of crypto and stablecoin? Faster, cheaper, smarter, more secure, immutability, smart. Where do you see it out in the wild that's actually faster, cheaper, and smarter than Chase payment tech? I think the answer is nowhere. I think in 3 years, Sukaa, humbly for us, but I think others that are smart about actually solving customer problems. So in our case, global enterprises and local African businesses, you will actually see people actually be able to point to implementations and services like Sukaa in the wild, where it can legitimately say, this is actually better than Chase Payment Tech. That is the goal. All the rest of it, all the, how you make the pudding, is, there are smart people on our team and smart people on other teams as well solving that problem. So I very much hope and expect and predict that we will be able to answer your question, Ville, about how does money flow from the EU into Africa, around Africa, and back out of Africa. It's not going to be hypothetical. We're just going to be able to point to Sukaa and others like Sukaa, right, that are well regulated, that fundamentally are asking people to put their trust in the stability of the dollar. We're not asking for someone to trust us more than any other bank. It's really fundamentally, do you trust the underlying value of the stablecoin? And what the dollar is going to do is another whole episode that maybe we do with some macroeconomists another day. But that really is the bet and the prediction. So always a pleasure, guys. Never enough time. Let's do it again soon. Really a privilege to be on with you guys. Really enjoy it thoroughly every time.
This was one of my favorite episodes because we went so deep on some of these topics, and I'm sure the payment nerds like us in our audience will also love this. And I hope for others it's been somewhat educational. My favorite thing as well, when you refer to how you make the pudding. Some people would say that you don't want to know how the sausage is made, but pudding is actually a much nicer, cleaner metaphor. So
and if you want to track kind of what we're doing, and you can test whether what we're saying actually makes sense or not, please go check out Sukaa.io. Again, we're still kind of in stealth mode. You can sign up to our email list, and we can keep you updated as we start rolling things out.
Perfect. And how can people find out more? How can they get in touch with you, Paul, if they want to?
They can just sign up on the same website, Sukaa.io, and they'll be able to reach me through that channel once we kind of come out of stealth mode. So
excellent. Good. That wraps it up for today's episode. Paul, we absolutely have to have you back in 2 or 3 years at the latest, because we need to hear how your predictions went. We heard many predictions in this episode. But again, we need to go and rescue Mr. K's girlfriend from behind a locked door. So I think we have to wrap it up now here. And again, as usual, please like, subscribe, everything the usual. All the podcasts always make the same announcements in the end. So do we. And we please do that. So more people are able to find this informative, neutral, and maybe in a dry way, a little bit funny podcast as well. All about fintech and the financial services scene. With that being said, I wish a not Merry Christmas, let's say a happy weekend to us at least. And if we're getting closer to the weekend when you're listening to this, happy weekend to you as well from all of us. And we will see you soon. This has been Fintech Daydreaming.
This is Fintech Daydreaming.